And we are starting off the week with Frank Holmes and Gold Game Film. With me now is the man himself, Frank. How are you?
Good to be here.
So Frank, before starting, obviously Super Bowl Sunday has just come and passed. What'd you make of that game? Pretty crazy, much better than last year, right?
It was a tight game, and it's great to see a rookie come through, just to be part of that. What an energizer.
Yeah, crazy play to end the game. I'm sure Pete Carroll's going to hear about this. He was the Seahawks for a very long time. So Frank, let's get started with strengths for gold. Gold equities. I mean, we've seen some pretty strong performances of late. Do you see that sustained throughout the year?
Well, I think so. I think the big part is that gold itself did exceptionally well when you compare it to all the other global currencies. How well it's done, and we've mentioned before, breaking out in so many other gold-producing nations. Then, when we add the gold stocks, they've been so depressed. Like last year, the big caps down 17%. So we're due for this mean reversion like last year when gold had a pop. The gold stocks were the best performers. And when we look at the math of markets, just statistically speaking, gold stocks are so depressed. But here's the benefit parts we've been talking about in your show, is that falling energy prices and weak countries' currencies from West Africa, Latin America, and Canada, where gold is being produced, is a huge windfall for many of these gold mining companies. In particular, South Africa, the currency fell 50%. So this gives margin expansion for these gold producers, even when gold is flat.
Now, taking a look at weaknesses, last week obviously was the big news with the Fed and gold's volatility on Thursday and Friday kind of tumbling and then jumping back up with a big rally on Friday. Now, when the Fed speaks, do you give them your full attention, or is it? Are you looking at maybe other central banks that are maybe playing a part in something? What are you focusing on?
Well, I think more important is what some of the big banks like Morgan Stanley came out on the weekend and don't believe rates will rise for another 18 months. I think the drama out of Europe, you have to then wrestle with Putin. So there's lots of anxiety and turmoil in Europe, which is the biggest trading partner of China. And so then we see China's PMI for the first time in 2 years, though it's below 50. We wrote about this and commented on your program in August when it started to deteriorate. And so I think that these are other important parts of this. Countries around the world are devaluing their currencies to try to stimulate economic development.
All right, now moving over to our OT segment and starting with opportunities, we've been seeing the return of a safe haven bid. It seems to be picking up more steam of late. Investors are kind of flocking to it with the geopolitical tension out there and obviously global economic downturn. Are you seeing a sustained rally in the safe haven appeal?
Well, I think it's two parts. That you're right about safe haven. There's no doubt about that. And negative real interest rates economically creates an uncertainty, and the geopolitics of Europe creates another uncertainty. So gold definitely becomes the reasonable place to put capital. And I think the other part is coming in. Morgan Stanley, they feel that rates won't rise. Goldman Sachs now says, based on their survey, sentiment is changing. And they're recognizing that they're no longer as bearish. We've got a sort of opinion reversal by Goldman Sachs that gold could probably rise here. The real sleeper are gold stocks.
And taking a look at threats, obviously lately we have Greece with their new left-wing party coming into power and promptly opposing Eldorado's Skouries project located in Greece. In your SWOT report, you also mentioned the DRC is looking to revamp their mining laws. Are they going to learn, or is this just something that's going to keep on going, that good jurisdictions are going to get hit with new mining laws and royalties and whatever it might be, and just straight opposition from government?
I think so. When you look around the world, you find that it's been devastating to companies. So they have to really go through and get a fiscal stability agreement with these countries. And if you don't get a fiscal stability agreement, that is where governments don't move the goalposts on taxation, then money's not going to develop these resources. I think that Lundin Gold did it in Ecuador. Robert Friedland pushed to have it done in Mongolia. So I think these are really significant factors.
And Frank, this is it. Touchdown pass for the week. It's a big one this week. Where are you throwing it?
Well, what's kept the world alive has been the U.S. and the PMI numbers, the ISM, as they call it in America, are very important because it has been the 800-pound gorilla globally right now.
Excellent, Frank. Thanks so much for popping in today.
And I'll be contacting you from next week in South Africa at the Indaba conference, and I'll give you an update on what's happening in South Africa.
Sounds great, Frank. Thank you. And thank you for watching this edition of Gold Game Film with Frank Holmes. Any comments or questions are always welcome at newsfeedback@kitco.com. Have a great week.